Hello guys, this is Ronan Itzkovich from Skills of the Trade. In this short tutorial I will show you how to properly draw a Fibonacci retracement tool. Now the Fibonacci retracement tool, as you might have already known, is a great tool to tell us when is prices in the stock market are most likely to reverse and continue upwards. It basically measures different Fibonacci ratios, which are the most common in our stock market, would be 31.8, 50%, and 61.2% Fibonacci. Now I will explain what this means. So basically, when we see a trend line here, we see a clear upward trend line, and we can stretch a trend line or draw a trend line. And we begin drawing a trend line from the bottom of the valley, the lowest valley, and then we would stretch it all the way until we hit the bottom of a valley. In this case, it would be this. It will not be over here, because at this point we have actually crossed down below this trend line, so therefore this trend line will not be relevant for us because the price has already broken through the upward trend line, and so the proper trend line would be to draw it in this way, where the price does not break through it. It starts from here and goes all the way down to here, and this means that we will start drawing the Fibonacci retracement from this point, where the last time the price has touched down the upward trend line. We go to the Fibonacci retracement tool, which we can find in any capable charting tools. In this case, I'm using tradingview.com, which is a very good tool to to see charts and draw different analyses on them. So I've taken the Fibonacci retracement tool, and I will begin stretching it from the bottom of the last valley all the way to the top of the last high that we have on this chart, which is over here. And here we can see the three main Fibonacci levels. One is 38.2, the second 50.0, and the third 61.8% Fibonacci retracements, which means that the price has come down to 38.2 or 50 or 60, and this would be, if it comes down all the way down to here, it would be a 100% retracement from the beginning of this retracement. So we can see that at 50% Fibonacci we have a strong support, and the price is most likely to reverse or continue up when it comes to these levels, either 32.8, 50%, or 61.8. So 32.2. So here we see that we have an upward gap, which started at 50%. We have the price coming down here, and then strong green candle forming on 50%. That's a strong move for us. And again, the price has come down slowly to 50% Fibonacci, which it would most likely, according to historical data and statistical probability, that the price will continue to go up when it has arrived at this level. So this is how you would use and properly draw the 50% Fibonacci. I hope you guys gained value from this. If you would like to learn more about how you're able to read charts and stock charts, I will explain it in much more detail in my book, Stock Trading 101, a practical beginner's guide to stock trading and technical chart analysis. In this book I go over many of the my trading strategies, how I'm able to read charts, draw Fibonacci lines, support and resistance lines, money management, and much, much more. Check it out on Amazon or visit my website, skillsofthetrade.com. Thank you.